Hi and welcome to this week's episode. This week's episode is on inflation. It's very topical at the moment, it's in the news a lot, and I'm joined by Nick Wilson. Hi Nick, how you doing?
I'm very good, thanks.
So Nick, what is inflation?
Inflation, it's a way of measuring the decrease in value of money. A lot of people say it every year in the news. It's everywhere you look, isn't it? Inflation's this, inflation's that, but what does it actually mean? How is it measured?
So this is the fact that things cost more money. Something that was £1 last year might be £1.10 this year.
Yeah, that's the way it looks. But it's not that things cost more, it's that your money is worth less.
Money's worth less, yeah. Okay.
Yeah.
All right then. So what affects inflation then? Why do we have inflation? Why can't we all just agree that we won't put any prices up ever again?
Could you imagine? What a world. So there's a few different things. I mean, you can categorise it in three areas. You've got demand push. So demand push, right? Let's have a look outside. And you've got all the fences blown over. This time last year, a fence post might have been £5. Now you're looking at £15 to £20 because 80% of people's fences have fell down.
All of a sudden there's an excess demand.
Supply and demand.
Yeah.
Prices go up. And it's normally caused because there's that much of a demand for the goods that there's a shortage of them. So people are paying more to get their hands on what they can. It's a bit like Willy Wonka and the Golden Ticket, isn't it?
It's yeah, maybe a bit before some of our listeners, but the last Buzz Lightyear was, like, people were paying £500 for the last Buzz Lightyear, the Christmas Toy Story came out. Yeah. It wasn't worth any more, it was just, there was only one.
That's exactly right.
Right, okay then.
And another way to categorise it as well is called cost push. And this is where the cost of manufacturing or supplying something increases. So we've got a big shortage on lorry drivers at the moment, which means you've got to pay lorry drivers a lot more money, which means shipping things from France to the UK comes with higher wage costs. The price of fuel's increased. So by the time it arrives in your hands, you've got all this extra expense that you've got to pay for.
So it's not that the haulage company is making more money necessarily. They might be, but it's, in theory, all they've done is their costs have gone up 50%. They've passed that on.
Exactly right.
As any normal business would.
Exactly.
Businesses can't just keep absorbing cost increases.
Which we'll come on to later, actually.
Right, okay then. And what's the third type then?
Built-in inflation. So every year, you would expect that you would get a pay rise along the lines of whatever the government publishes the inflation rate, because that's the cost of living. So things that are expected to increase every year is what we would call built-in.
Also, it's just you expect your phone bill's going to go 5-10% every year. And in fact, when you sign up for anything now, they tell you it's going to, don't they?
Yeah, it's built in.
So, yeah, there is just like a... And is that just momentum then? Is it just, well, we think there's going to be, so we'll build it in now?
Yeah, I mean, a lot of people can predict what's going to happen. So you're going to take on more people, you want to grow your team. The cost of their living is going to increase, so you've got to factor in a bit of that into your cost of paying them. So these things are just built in. I'll just keep referring to that because it's nice and simple.
Because it's built in.
Yeah.
It's built in. Okay then, so we've got the different types of inflation. We know what affects it.
Yeah.
So it's either excess in demand over supply, creates a surge in price. Cost push is where, so if that was in fence posts, the people then building fences have to charge more to build a fence.
Exactly right.
So that's the two sides of the same thing. And then the fact that it's built in, well, everyone just assumes stuff will go up. So it's like self-fulfilling.
Yeah.
It does go up because everyone assumes it's going to. Okay then. So what are the different types of inflation then? We'll hear people talk about, CPI, RPI. Why does that matter? What does it mean?
I'm not going to go into that too much, but there are different types. But the main one is the consumer price index. That's what's going to affect most people really. And it's measured off a basket of goods. So they'll ask a number of people in the UK what they normally buy with their money. And then it might be 8% of their monthly pay goes on fuel, a little bit more goes on food, whatever. And it all makes a nice pie chart.
So it's not a basket with like a loaf of bread and a tin of milk in it. Tin of milk?
A tin of milk? You can get tins of milk.
I know, but I don't see them.
The really stick sweetie one.
Yeah,
yeah,
carnation milk.
That's the one.
Best coffee. Makes the best coffee. So it's not literally a basket of it's not a bag of shopping. It's just a term, isn't it? It's what do you spend your money on generally. We'll have a bit of that. What's happened to the price?
Yeah, more or less, yeah.
Right, okay, so it's the cost of driving your car, presumably, is fuel, heating your house, buying stuff to go in your house, buying the food you eat. It's a mix of all things. Right, okay then. So we've got inflation. It's kind of, I'll say it's always there. It's not always there. Like, things can go down as well. But let's just assume they're going up because that's where we are at the moment. What can you do about it then? If you're in business and you're facing one of these things, what do people need to do?
Number one, charge more. Yeah, because you've got to pass the cost on to somebody.
Pass it on. So that's cost push. That was the second thing. If it's costing you, you shouldn't absorb that.
Yeah.
You should rightly pass it on.
Yeah, and I think businesses that are fearful or don't value what they do enough are often the ones that will struggle. The profits will start to get squeezed. And that's just one factor. Another way around it depends what you do. So if you sell goods, bulk buying, if you buy lots of what you need now, any future impact of inflation or cost changes, you've hedged against it.
It won't affect you as quickly. So a temporary spike in prices could come and go and you would never know.
Yeah.
And meanwhile, if everyone else has put the prices up because of that, you could theoretically just make more money.
You could. I mean, of course, you said the prices could go down. So there's always that risk. But let's face it, it's quite unlikely if you're dealing with physical goods.
Yeah.
But you're going to be one of those people causing the supply and demand as well.
Of course, yeah. The more, if you buy in bulk, more than you would. So toilet roll, lockdown toilet roll. Everyone had presumably garages full of toilet roll.
Yeah, the cleanest bums we've seen in years. Yeah. Not that we've seen, but you know what I mean.
Not like those old dirty bums we used to get.
That might have been more of those anyway, but I'm going off topic because they couldn't get a hold of it.
Yeah. So yeah, you should, you've got to be careful there. But just generally, people might say, well, why would I buy a year's worth of stuff? You don't mean that, do you? You just mean, if you normally buy a single thing every couple of weeks, buy a dozen, or it could be.
Well, that yes and no, but it all comes down to planning, because you don't want to go and buy 100 bottles of shower gel if they're going to go out of date by the time you've used 10. But if you know in the expiration period you could use 5 of them, buy all 5 at that one time.
Yeah. And
planning is a really important part. Planning what you're going to use, what you might think you need. Building in a contingency. People in construction will do this quite a lot, especially at the moment because there's a lot of price increases around building materials. You've got to plan it out, haven't you? You've got to manage the project from start to finish. What do you expect to use? When do you expect to use it? What sort of wastage are you expecting? Factor all that in. So yeah, proper planning.
I suppose if you're building something that takes 18 months, building a block of flats or something, there's no way you could have predicted 4 storms in 6 weeks.
Yeah.
So you couldn't have predicted that fence posts were going to, go up. But I presume in their contracts they say, well, we know what the labour's going to cost within reason. We know what that's going to cost. But if it changes, we're going to pass that on.
Or if it changes by more than an acceptable amount. Yeah. So if the price of materials increases by more than 5%, we will pass that on.
So what's the dangers of businesses ignoring inflation then? So
ultimately
let's say
bust.
You don't pass this on.
Yeah.
You're just working for less money, aren't you?
Yeah. And I think it's easier to fall into that trap if you don't provide goods. If all you do is provide a service, like accountants, for example, yeah? People ask, what's your main cost? And it's people, yeah? Really good people who do really good jobs. Other than what they get paid each year and whatever their pay rises are, it's easy to overlook the other costs. So the IT support, the utility bills, don't even get us started on those. Stationery. Insurance, yeah, depending on what professional service line you're in.
I know a lot of solicitors, for instance, post 2008, simply couldn't afford their renewal insurances because there was a lot of risk involved in it. The price went up. It wasn't demand necessarily, but insurers charge based on risk. There was a lot of stuff yet to fall out that actually put a lot of people out of business. I presume because they couldn't pass that on entirely.
Yeah.
But yeah, we haven't just got people, we've got all kinds, haven't we?
Yeah. But if you're saying inflation's 5.5, 5.6% that said today, and you only put your prices up by that, but you give the people in your team a 10% pay rise and your utility bills are going up by 25%, you're already out of pocket at that point because you haven't planned properly for it.
And actually, this is an important point here. The headline rate of inflation is like a genetic average. It's not sector based, is it? If all you're doing is making and selling fence posts, it's a totally different proposal to someone who
Well, what
is
you
a
see on
self-employed musician who just turns up with a mic and a
everybody's
guitar.
got different costs.
Different altogether, isn't it?
Yeah, and what you see on the telly is generally for consumers, the end person, the domestic
homeowners,
person. The user.
Yeah.
So it's a bit misleading. So if you do get price increases throughout the next year, and it's more than the 5.6%, you know you're working with somebody who's been planning properly, so they take pride in what they do and they know what they're doing.
And they want to maintain their service level, because if they have to all of a sudden start doing work quicker or for less money, something has to give, doesn't it?
Yeah.
Yeah. Okay.
Good, fast, cheap. I'm sure you might have heard of that before. You can only have 2 of them.
You can't have all 3.
Yeah.
Can you? Yeah. Okay then. So we know about the different types of inflation. We know why people talk about it on the TV. We understand why it's an issue. How? Because you mentioned before when we were talking about this before we started, something about shrinkflation. What's? Because everyone will know this and they'll go, that's why they do it.
So the price elasticity, you see. Now that's how much somebody's willing to pay for something, or how much they've got spare, which could be spent on different goods or items they've got. Now, if you walked into a shop tomorrow and suddenly your favourite bar of chocolate went from £1 to £3, you're probably not going to buy it. But what they'll do is they'll put it up by a little bit, but give you less of it. I mean, I was in the supermarket the other day and I bought a litre of orange juice, or so I thought. Got home, give it a shake, was like half full, and they'd reduced it to 900 millilitres. So,
but in
the same bottle?
In a litre bottle.
Yeah.
Yeah.
So you didn't think anything of it.
You just thought, that's the size that I normally buy.
Yeah.
And everyone knows, crisps and Mars bars are more air than chocolate and potato now, aren't they? Yeah.
I mean, they could just reduce the size of the packets and do their bit to save the world, but they're like making you think you're not paying as much.
Diplomatic there.
Yeah.
Save that just in time. Is there anything else we need to be aware of then? Because interest rates are still rising in the background as well. I think personally I feel interest rates aren't as much an issue at the moment, because I think a lot of homeowners are on fixed rates or still pretty low rates. The base rate might have doubled, but it's been barely any difference. I think on 100 grand it's cost people 17 quid a month. I know it's 17 quid, but when you hear doubled, your mortgage hasn't doubled. And most people are on fixed
just
anyway.
Just the base rate has, yeah.
I mean, is there anything else? I suppose we're still waiting to find out if Putin turns the gas off, I suppose. We could have more energy spikes yet. Yeah.
And the other wary thing is, I don't know if you can remember, I think it was you telling us about the great potato shortage, when a bag of chips went from 50p to £1, but they never came back down.
Yeah, there's a lot of that happens, isn't there? Yeah.
And I think we might be in an era now where we're just setting the next benchmark, which is unfortunate for a lot of people.
Yeah, I was speaking to someone earlier who's an energy broker, and they said the companies who supply the energy had mentioned that they expect prices to soften after this peak. They didn't say go down, revert back to where they'd come from. They said soften.
Just not go up as fast.
Just the speed at which they're going to go up is going to stop being as harsh.
Yeah.
But there was very little suggestion that it was going to come back down. And I think, so what I distinctly remember is all of a sudden there was something happened with potatoes, so they had to put the price up. But when the potatoes dropped, you just started getting these massive bags of chips for like twice the price.
Was it not because Ireland had a good summer?
Oh, I don't know.
Yeah, I think it was, because it normally rains a lot over there. So they get really good weather, and the rest of the world pay double for their chips.
Yeah. So that's, I'm pretty sure that's why there's a lot more obesity around now as well, because you have far too many chips. But joking aside, this is something we're seeing now. You've got a labour market that's totally different. There's a lot of people saying they're struggling to get, in like shops and leisure, they're struggling to get bar staff, struggling to get, baristas. And with the VAT reduction, because I think there's still a temporary VAT reduction, which is either gone or going, I think, in certain sectors, they're going to have to pass that on, otherwise they're just going to fail, aren't they?
Yeah.
So I think people need to brace. It's probably going to be a year of people realising that prices need to go up.
Yeah.
It's not over yet, is it?
The last credit crunch back in 2008, you know, that was a big study about what's the first thing to go when people start to feel the pinch. So it's definitely worth, if you don't know about that, having a little look at it and seeing what sort of things the population don't want. Because if you're in that category, you need to start thinking about ways you can reinvent your business or your products, really.
Yeah, yeah. Become inflation proof.
Plan it.
Yeah. Heaven forbid, plan, Nick, plan.
Plan.
And we can't have an episode without talking about cash flows. So, but you can literally model this out, can't you? You can model out what will happen if your cost of sales goes up 30%.
Yeah.
You can model out how much you need to increase your turnover by to match that.
Yeah.
You haven't got to do it yet, but you've just got to be aware of the levers you can pull to control what's happening around you, can't you?
Yeah, constantly updated. The key thing here is whatever you plan now, right, we've seen how unpredictable everything can be. So if you and your business know, right, actually we need to expect an increase in this particular area of another 20%, you should be able to quickly go and plot that extra 20% in and see what impact it's going to have.
Yeah.
Can you afford to take that hit yourself? Do you need to revise your prices? How long do your quotes last? Will they last for a long enough period that you will have to honour them and feel the pinch yourself?
Yeah, it's a great one, that, because a lot of trades will just say, I mean, everyone's seen this kind of thing, quote valid for 15 days, 30 days or whatever. But if you just give an open-ended quote, you could have some pretty uncomfortable conversations with people coming back a year later going, can you build that extension then for that 30 grand we talked about? Yeah, not at all, sorry.
Be lucky if you get the stud work.
And then, you know, all of a sudden you've just created your own problem, haven't you?
Yeah.
So yeah, okay then. Well, thanks very much, Nick.
You are very welcome.
Appreciate it. So that was inflation. Be sure to like and subscribe. Give us any feedback in the comments. If you've got any questions or suggestions for next time, we would appreciate them. And please do leave a review wherever you're listening or watching. It does help us.